Good afternoon, everybody. Happy Friday. Gabe Velazquez here with you, transparenttrading-solutions.com. I hope everybody had a great week. I know we did here at TTS. Welcome, everybody. Hi, Englishing. Okay. How you doing? You must be new to the channel, right? Or maybe you're using a different alias. In any event, welcome everybody. Again, Gabe Velazquez, Transparent Trading Solutions. Hope everybody did well this week. If you understand how the markets work, so on and so forth. So again, give me a thumbs up, put some commentary, subscribe to the channel. I do have a class coming up next Thursday pertaining to profit targets, which a lot of people struggle with. So I think that would be something you may be interested in. So if you are interested in attending that class, it's next Thursday. Also, if you're interested in getting my newsletter, and also if you're interested, I've actually had a few inquiries about 5 free days with us here at TTS in the morning session where we give you levels, go through the charts and so forth. So all that good stuff. Yeah. Okay, good. Let's start off with what obviously you guys all in the markets. We had some pretty good selling, and I want to review the positions again. It's very important to me if you guys are watching the channel and watch consistently. For me, it's all about results, right? It's all about tracking and so on and so forth. Because if you don't have a tracking system, if you don't understand what you're doing, what kind of results you're producing and so forth, then you're kind of just flying blind. So it's really important. So last time I was with you, I mentioned we were in several positions, right? We were in a SPY going into the Fed announcement. We were in a SPY volatility. That did well. We covered that today. We were obviously the put side of that two-legged strategy worked out really nicely for us. So we did cover that today. We were also in the XLE energy sector, both with another volatility. Clearly, the puts also worked really nicely on that. We were long USO. We did stop out of that, but because we were short with the XLE via the puts, that actually offset that. And then we were also, I also sold the wheat position that we're in, and so we're basically neutral. We also try to get long the Russell and took a small loss earlier in the week. But so on balance, we had a decent week with adding everything up, minuses, pluses, the whole shebang. Okay, going into next week, what's happening? Well, today's selling felt kind of panicky. Now let's get into, again, pull up your charts, everybody, and look at the S&P. Now, one of the things that's really important to notice is based on the cash. By the way, if you're tracking the cash S&P, that in fact did trade below or through Friday last June 16th lows, right? So on the cash basis, it actually did cross that. However, if you're looking at the charts, that low was roughly 36.39 on the S&P futures, right? You're using the unadjusted charts and so forth. So we in fact did not breach the June lows. So we'll see. I do believe we're still going to hit those, and we have some levels below that I've been talking about, around the 3,600 level. So we may get that next week. The other kind of notable was the VIX. I've been talking about, today felt a little panicky. The VIX did cross that important 30 threshold, right? Which again implies that we're probably, going to hit that 35 to 40. That would be the ideal scenario. In fact, I am positioned. We are in TTS. In fact, we were trying to get long some stocks today, and still couldn't get filled. So we're gonna keep those on. Yep. Hey, Gallo, how you doing? So we were trying to get long FCX. I think I mentioned that the other day. We missed that by 10 cents, and then it rallied about 60 cents after we, as the market kind of had some short covering. So we are looking at several stock positions to get long next week. I'm also looking to get long bonds, TLT, and possibly the 10-year. And here's the scenario. So clearly, the market is on its heels right now. Is it going to continue falling? Likelihood is yes, but I think based on looking at the VIX in the mid 30s, possibly 40 next week. The scenario I'm playing out right now is that we have a new low in the S&P and the Nasdaq across the board, and I want to see kind of that washout. I think we're getting close. Spike in the VIX, and then I think we have a durable rally coming up into the fall from a longer term positioning. So we'll be looking for that next week, and we are already. I mean, we have some positions that we're looking at to next week to get long some stocks, right? So in particular, TSM. I think I just mentioned FCX. We just missed by a few cents. Also looking at Apple. Apple looks interesting. That's been holding up very, very well if you think about it. 150 on the June lows. The Apple was at 130, 128. So that's been holding up fairly well. So again, if you're a longer term type of trader, maybe a swing trader, you may want to start nibbling at some stocks, and also in the SPY. Piecemeal it in, like I advise everybody to do on a long-term basis. Short term, again, I think we're going to go lower a little bit, but I think we're going to get a durable rally. Probably remember October, bear killer. If you guys have been reading the newsletter, back in the middle of August, I was telling everybody September is a bad month. Be prepared, brace yourself for some volatility, probably lower prices. I think now again, and if you go back to the June newsletter, I was actually like where we are right now. VIX high, everybody bearish. We've got some really high bearish sentiments. So a lot of it is setting up like it was in June, but I don't think it's coming in until next week. So again, get ready for that. If you're still, of the idea that you want to keep shorting, keep doing that, but just be very careful. Because one of these days we're going to have a fierce, short covering rally or whatever. So you got to be very careful right now because now you're shorting deep in the hole. So I'm not suggesting you don't keep shorting, but I would suggest being more careful if you're going to short the breaks and maybe look for rallies to sell into rather than selling the breaks. I think that's the kind of situation we're going to come in. And then come mid October, once we clear out September and start going into October, then I think we're actually poised for a much stronger rally going into year end. So we'll discuss that next week. Also, bonds. So bonds, as we know, I've been telling you guys, bonds is the main, are the main driver, interest rates. So the look at the TLT today. It actually rallied. So there is some kind of flight to safety. But here's the thing, though. Rates going higher at some point, and I was talking to my members about this earlier today, is the tightening that's going on. We had the Fed meeting on Wednesday. They raised 75, which wasn't a big surprise. I mentioned to you guys, that was kind of baked in the cake, and the market still sold off. But the next piece of the puzzle is, when does that filter into the economy? And I do expect that we are going to have some kind of recession in Q1, right? Q1, Q2 next year. So let me ask you guys a question. What do you think rates are going to do when the market starts, and especially the bond market? What do you think rates are going to do when the bond market starts sniffing out a slowdown or a recession coming up? What do you think rates are going to do? Let's see if anybody's paying attention. Anybody? Well, I'll give you the answer then. I guess nobody knows. Rates are going to plummet. Yep. Yeah, rates are going to. You know how if you look at the chart of the 2-year, the 10-year, right? You ain't seen nothing. Watch when that happens. Watch what the bond market does. Yep. Now, I'm not saying it's going to happen like next week, but I think we're getting close. So that's why we are. In fact, we have some orders sitting now to buy TLT uh, for the next couple of months, right? So if you are interested, by the way, again, if you're interested in what I'm doing, sign up for that 5-day free trial, and you'll get a glimpse of what we're doing there. So we are positioning long, and I'm using TLT because obviously it's less risk and all that kind of stuff, right? But and trading the actual bond futures is as you know, the volatility is crazy right now. Every level that you're picking on the 10-year or the 30 years is $300, $400, $500, which is fine if you can stomach that. But again, that's why I ran that options class last week. Is there's other alternatives. TLT is a great alternative to play the interest rate market. Yep. Yeah, but I expected a little bit lower, Gallo. Yep. But you know what happens if you go far, far deep in the hole? What happens to all those distribution levels, right? Remember those lessons, Gallo? Do you have to worry about distribution levels when you're at extremes? I mean, yeah, you could get a pause, but so in any event, yep. Also, the dollar. So again, if you don't understand how the market works, what are the correlations? You may want to write this down or look at your charts. It's a real easy equation, right? We had 3 central banks. We got Bank of Japan intervening. We had UK plummet. The British pound just plummet to like multi-year lows. The dollar surging. But why did the dollar surge? So here's the formula. Stocks down, dollar up, rates up, dollar up. So it's no surprise that the dollar had another big rally. Stocks are going down, right? It's a safe haven. Remember, dollar is the world reserve currency. So people put their money there as a safe haven. And because our interest rates here in the US are going up, the carry trade comes into focus, right? So if you can borrow zero from Japan and take it and put it in US dollars at 4, that's called the carry trade, right? So that's why you continue to get a surging dollar, because we keep raising interest rates. So if you don't understand that correlation, that's how it works, right? Currencies work based on interest rates of the prevailing country. It's called a carry trade. That's what happens with a lot of major central banks and so forth, right? They borrow, again, a quick example, just so I just said. So if you go to Japan, borrow 100 million yen at 0, they got negative interest rates, take that money and buy a 3-month T-bill in the US, right? Exactly, Gallo. Yep. And by the way, the dollar has gone parabolic. So every time the dollar's gone parabolic into a distribution, again, I'm not suggesting it's going to collapse, but when interest rates start collapsing here, so again, that whole correlation, when the U.S. economy starts slowing down markedly, I'm talking about not just when GDP slows and you get a sense, and you're already getting a sense. I mean, FedEx warned, there's a bunch of Ford just warned last week and so forth. So there's going to be some really nice setups coming up here in the next, I would say, several weeks in all these longer term, not the day-to-day stuff. The day-to-day stuff, again, that's okay. And again, you know how I feel about this day trading stuff. It's really, really tough. Even today, if you held on to your short, I mean, if realistically, if you're shorting the S&P today, right? Let's think about this for a second. again, the notion is, let's say you were going to do a day trade today. And if you take, look at a 5-minute chart of the S&P, and you came in today shorting the S&P, and you didn't cover at noon Pacific. How did you do with your S&P if you shorted it on the open and you didn't cover? So, quick question for you day traders. I'm assuming if you didn't cover, like if you covered at 36.60, you did fine. But what if you held on to it because you got greedy or you thought the market was going to crash into the close? How did you do with that? You get my point? So again, you can sit here in la la land and say, yeah, I shorted everything and I made all this money, whatever, after the fact. But what's again, look at your 5-minute chart. If you think I'm kidding you, all you got to do is just look at your 5-minute chart. Yep. So, this is why I teach my members this day trading stuff, is it's fun, but over the long term, you know how that works. So in any event, that's my little kind of mini rant for today. Right? just trying to keep it real, right, everybody? Right, Gallo? Just trying to keep it real. Now, we came into the puts, by the way. So here's the difference. We were in those puts since Wednesday, as you remember, right? So get that, right? We've been in those puts since Wednesday, since the Fed, actually before the Fed. Remember Tuesday, I told you I put those on. So we've been in those puts since Tuesday. That's the difference, right? Anyways, okay, moving right along. So where do we go from here, everybody? Again, it's going to be really tricky. So where do we buy the S&P or where do we sell it? So I would say if you're gonna, short, you're gonna probably, we do get a bounce maybe up to 37.50 or so. You could short it there. I think you got, you got a little bit of a bounce. And then on the downside, I'm not seeing a whole lot of quality. That's the thing with the S&P. Obviously, the lows 36.40, 36.39. Then beyond that, really, you'd have to go all the way down into the 3,500 area. Really, not even that. Actually, the next level I'm looking at on a daily chart is all the way down around 34.80, right, on the S&P. And so that doesn't mean, again, the market's going to go straight there. And if I want to go long, I got to see some, new levels developing, some rally-based rallies coming in, or some buyers stepping in, and then catch the pullbacks there. Does that make sense? So that's kind of the way I'm playing it. And the NASDAQ on the future side, incidentally, did not break the lows either. That low, if you look at your charts of the NASDAQ futures, came in at, I think it was right around 11. What was that? 11,650 or so. So we have not, on the futures side, have not broken below the June lows. And so I think that's still a possibility next week. Again, the scenario I'm really looking at, the setup, if you will, is, and by the way, I'm playing it via stocks because obviously, and maybe QQQs or TQQQ, if you're looking for a setup there. Again, a breach of the lows, because typically the algos will come in, everybody will get short on the break of those lows, trap everybody, get that VIX jumping around 35 to 40, and then that's going to be your setup for some longer term set, for some TQQQ, that type of thing. So that's kind of what I'm looking at. And again, I'm looking at with my members next week, right? If you want to know what the setup is, that's really the setup. And there are some levels on QQQs that I mentioned the other day. Okay. Let's move on to oil, right? Oil broke down clearly. And I just mentioned, we were up on that thing and, went to 90, broke down. We are now coming into, if you look at we had 80, which is barely holding. Next level is going to be around 76.90, 70, somewhere around the 77 area. If you look at your daily chart on oil, I do think that we're probably getting close to a bottom in oil too, because they're going to replenish. We'll hear about that next week. Actually, they're going to start replenishing the strategic petroleum reserve. Right? You guys know about that. They mentioned if it drops below 80, and then I think all these oil producing countries are going to come in and defend oil around these levels here, around 75 to 80. So I would be, I did cover my XLE put, but I am going to be looking to get long XLE. If you guys, again, XLE, I have to tell you, the options on USO, which is what I've been trading, are very wide, and I think that's because due to the volatility in oil. So I'm going to probably not do those anymore. The spread between the bid and the ask is pretty wide on those options. I think I'm going to start looking at XLE as a proxy for oil, and XLE has some really nice. The options are nice and tight, really good volatility. So I think I'm going to switch over and start looking at XLE. I don't know if you guys know that ETF. That's the oil ETF. It's got the biggest piece in that is Exxon and Chevron. So I'm going to use that as a proxy for oil next week. And I'm going to start looking, even though I was, we were long puts, we were long the 79 puts expiring next week on XLE. I'm going to I want to get long XLE next week. I'm going to look at a level here to get long XLE in the mid 60s or so, right? And we could actually be hitting the bottom right now in XLE. So we'll see on that. Okay. So that's on the energy. Nat gas looks like that's also coming down to that 650 area. I think we've been talking about oil, nat gas, and I mentioned if it breaks 750, it's probably going to go a lot lower. So it looks like we may be in the midst of round tripping that thing once again down to in the 550 to 6 area. Now again on the options, it's been very, very again the implied volatility on those options is very high, and trading the futures has been extremely volatile. But I think the volatility is going to calm down on that. So I'll be looking to maybe short nat gas, but we are coming into some nice 650 around that on the chart. Look at that. That could be a situation also to catch a bounce on that gas. Okay. Finally, grains, right? So I did, we were long wheat with the dollar surging. That's also putting pressure on the grain market. So all the commodities across the board. So gold, as you saw, I think somebody was in here the other day. I mentioned gold. I mentioned 1,700. It hit. There's a level right around 1,700 that hit, pulled back. We're coming into some levels in gold that look interesting around the 1,600 level. Still more interested in silver. It's range bound. I'm going to do a position in silver. It's building a nice big broad range. So silver looks much better. If you all you got to do is look at your charts. You can see that silver looks much better. Copper also still interests me. And then platinum got a big hit. So everything got hit today because of the dollar. And platinum's got a really nice level coming up here in the low 800s that I'm interested in as well. So look at that chart of platinum. Again, that's a big market. Not everybody can trade it. Very thin. Always, assess your own risk and all that good stuff. So I'm just kind of throwing out. Don't take any advice I give you until you actually do your research. Okay. And then the grains, I think I just mentioned, we just cannot wheat actually hit a nice level at 930, pulled back. It just can't get any traction. I'm going to be actually starting to trade the wheat futures contract. There's a mini wheat contract. If you guys haven't looked at that. Now, one of the things I would caution you, it is a thinly traded contract. So make sure you understand that. If you're going to trade the wheat, the mini, that's 1,000 bushel contract. We also have a long at TTS on soybeans. So we are going to try to get long soybeans next week. So we're setting that up as well. But other than that, really, you guys have any questions? Any market you want me to look at? All in all, I think volatility is going to spike. It's going to get really tricky. And I gave you guys the possible setup for next week. Again, could you continue shorting stocks? Absolutely. Just be careful, because one of these days we're going to come in and we'll have that big swoosh, and then we'll have a tremendous kind of short covering rally, and you don't want to get caught up in that. So even though you continue to short, make sure you understand that and don't get caught in the next big kind of short covering rally. Okay. All right. So with that, I'm going to get out of here. Everybody have a great weekend. Again, if you're, yeah, good question, English. So by your moniker, I'm assuming you're an English in Texas, or you're an Englishman, correct? just my deductive skills, right? Spoiler alert, right? Oh man. So English in Texas. If I don't see a level in on the charts, which I can't see on the charts now that the pound broke 114, which was I can't make any determination where it's going to go, right? So if you want to go along the British pound, you're going to have to see some buyers coming in and show you some kind of level. Does that make sense? So buying the British pound is off the table until we actually see. Yeah, right, Fernando. Yep. Yeah, exactly. So that is off the table. Wait for a rally to short it, and even now, I like to say that you have it may be too far down to short right now, but you can't buy it because you don't have anything to lean on, right? Does that make sense? So I would just that kind of market, and as you guys know, I've been kind of leaving for the most part all the currencies alone, right? I haven't been trading, and I actually did mention the yen. Remember, the yen did have a nice pop off their intervention, but yeah, I don't trade the FX market, Gallo, so I can't. Again, if I don't see it, can't trade it. Bottom line, with to answer Englishman in Texas, I'm going to leave British pound alone until I actually see a strong rally into a distribution or some type of level of accumulation forming. Okay. Now, if you trade FX like Gallo and you can pinpoint some levels down there using the FX charts, that's another thing. But I don't do FX. I've never done it, never will. So I can't, I can't speak to that yet. So in any event, okay, everybody, have a great weekend. Again, sign up for the 5-day free for the newsletter. If I have a class, just quick reminder, I have a class next Thursday about a profit target, systematic profit target. If you guys are interested in that, sign up there too. If not, have a great weekend, and I'll see you guys next Tuesday, same time. Take care, everybody. Have a great weekend. We got a really exciting week next week. lots of great setups, lots of volatility. So be ready. Okay. All right. Take care.